Alright, let's talk quickly about ATOSS stock. This is a German company. They're making HR software. When I first looked at this company, they had fantastic growth, well above the rule of 40. Let's take a look at the market now. It has slowed down significantly, just like a lot of the other industries. However, as you will see, the numbers are still extremely strong. We need this type of software today for time reporting. We're not punching cards anymore, like a lot of the older viewers on the channel. You might remember you went to work, you would punch in, you would punch out on like a clock. Nowadays, a lot of this is done digitally with the time reporting, with request for vacation, with just this whole employee management life cycle. They have everything digitally today. And ATOSS is not the only company doing this. If I just Google HR software, I will see an ad for Personio, I will see an ad for HiBob, I will see an ad for Zendesk, Danish company. And then I will see natural results here for Sage Software and HR Locker, Bright HR, Oracle, Workday is another one not showing up here in this search, Bamboo HR. You see, there's a ton of these. Then how come that this stock is performing so well? If we just look at share price basically here for ATOSS and we zoom out a bit since the IPO, we can see that this stock has basically skyrocketed recently. And this is a combination of good profitability as well as good double-digit growth. And growth has slowed down. First, when I looked at this stock, I remember they bragged about the high growth numbers instantly in investor relations. We can take a look at this and see if this is still the case. However, in terms of price to earnings here, you can see that it's quite expensively priced. I think it's a bit too expensive now compared to the growth that we're getting for the company. If we look at finances here from quarters, we can see that for the June quarter of 2023, 34% growth, just fantastic. And look at this profit margin here of 22%, just amazing. They've been able to increase it 23% here, 30% revenue growth still for the quarter of September 2023. And then December here, 40 million. So this is in euros. Once again, just fantastic numbers, almost 30% year-on-year growth, and we're seeing profitability absolutely skyrocketing here with just fantastic margin. See, 26% here, so it's gone from 22%, 23, 26 here for December. This is just software. That's what's so fantastic about it. You have the cost to develop it, then you sell it with your sellers. And once it's sold and you're doing licensing, renewals, that's a lot cheaper than acquiring new customers. And if we look for the March quarter, we can see that profit margins have dropped down, but they're still up year on year compared to the same quarter. We're also seeing revenue growth slowing down here, almost halving. So maybe this is just a fluke, maybe this is the start of a trend. We don't know yet, but we have seen fantastic growth from this company. We've seen good profitability. And once again, this is software, so it's very attractive to investors for that simple reason. That's why we're seeing valuations like this. A lot of other software companies will be judged by the same metrics. People like to use the rule of 40 on them. But just look at the performance of this company since the start. This is the power of just finding a company that fits a niche in the market, that's useful, that's being adapted, where there is not a lot of churn, people keep the software, then you just rake in on cash eventually. We can just take a quick look here once again on ATOSS and you will see the different challenges that they help solve that we see in the marketplace. We will see industries where they are applicable with their solutions, and I think they will have a lot of references here on the work page as well. So just a great company for that simple reason. Looking at the stock now, I think that this is not one that I will continue to increase on. I was a bit spooked by the slowdown in growth. I will need to watch some more earnings calls on this one and just try to judge where this stock is going. It's had an absolutely amazing run, but that's not any reason for it to slow down now. We should water the flowers that grow fast so that they continue to grow. However, this valuation here is a bit expensive now. We're seeing small dividend as well. Maybe they don't have a way to deploy capital efficiently. Maybe that's why we're seeing growth slow down. Maybe they are starting to saturate the market. But then again, this market is huge. They have a lot of potential to expand into other markets. So maybe just because they are large in certain geographical areas, that doesn't mean that they can't take market share in other areas. But that's going to be a bit more expensive. You're going to have to do a lot of outbound activity and try to challenge other businesses, when they have the request for proposal out and they're looking for a solution, then you're going to have to come in with a steep discount and try to snatch that contract. Just a very, very interesting company for that simple reason. A German one, software company, great margins, great growth, and as you can see, also fantastic stock performance. Let me know what you think. Will they continue to perform? Will share price continue to rise? Or do you think that this slowdown in growth will cause share price to start to decline now? That's been it for this video. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.